about straddles and strangles real quick because I've been seeing this across stories so much. People be like, so I made a video, by the way, where I was like, if you want to play it safe or how traders may play it safe in option trading. And I was talking about straddles and strangles. And if you don't know what this type of strategy is, you're pretty much buying two legs. You're buying a call and you're buying a put because you might not know which way the stock is going to go. Now, this is a little bit more expensive because you're buying two legs. You're buying a call premium and you're buying a put premium. But look, all right, somebody recommended you to do shit like that on stocks that don't do massive movements, like American Airlines. Someone said that they did it on American Airlines and it didn't do anything. And they said that their option was losing value and they didn't quite understand why. What happens with straddles and strangles is that if it's flat, if the movement is not enough to make up for the opposite leg, it's going to start to lose value, or you're not going to see a whole lot of return on your option. When you are using strategy and strangles, it's highly recommended that you do this with stocks that have like high volatility, that move in massive increments, or you doing it on something like you're playing earnings. And by playing earnings, is because you never know how the earnings are going to come out. You don't know how people are going to react to those earnings. Basically, a stock could miss earnings and the stock could still go up. Tesla does it all the time. They miss their delivery reports. The stock still went up. You just never know. And so you get a straddle or a strangle so that you can kind of play both sides of the field just in case earnings could go either way instead of just making the assumption that when earnings come, it's going to skyrocket. Okay, hope that makes sense. So doing those type of trades on low only because it's a low risk stock or because it don't cost much, or you see that it moves, look at how that stock moves. American Airlines is one of those stocks that moves 30, 40, 50 cents on a day, and that's just really not worth getting a straddle or a strangle on. If it's low risk, look at the charts, see what the charts are telling you. Okay, American Airlines is one of those ones that kind of has like a rinse and repeat type of effect. It ain't nothing that I'm doing a straddle or a strangle on unless it's potentially earnings. And even doing earnings, if you look at it, it might move up a dollar or down a dollar, but it does not move in massive, massive increments. Okay, so if somebody is suggesting this to you, make sure you're using that strategy in the right environment. And by environment, I'm just saying the right type of stock. Okay? Tesla, when the election happened, that was one of the ones I said, if Trump won the election, these are the stocks that could potentially skyrocket. If you lost, look at these. And the same